that you thought ETH might well, and I'm quoting here, might well go to $20,000 this cycle. Are you still standing by that?
It's all I did. No magic.
Can you explain what the quantity theory of money is?
Well, this is this MV equals PQ way of looking at, and that's why we talk about velocity of money, because that's one of the reasons the whole thing fell apart. And you know, you're trying to figure out what the overall value of the money proposition is within this. And I'm not sure any of that applies. And that was my issue with John Pepper's paper. I thought it was really interesting, but I spent a long time thinking about it. I thought, that doesn't work in the real world. I mean, there is literally zero correlation between money supply and inflation. So that kind of throws all of his arguments, all of that kind of Friedman stuff out of the window. So I looked at it and thought, well, what is the difference here? I think he's arguing the case for Bitcoin, about Bitcoin as a reserve asset, and then saying, basically, nothing else looks like that. And guess what? Nothing else looks like Bitcoin. And that's why we love Bitcoin. You know, it has a unique value proposition in the world. And many of these other protocols have their own unique value propositions. Many of them will not get network effects, and some that we don't even know of now will have massive network effects. It's the same happened with the internet, same happened with mobile phone networks and almost any other network that we've seen.
And so, Raoul, does that mean that you allocated 10 or 20%, like Lynn was saying she might do if she were to allocate?
So I started at 80-20. The Ethereum's gone up a lot more already. And then I allocated more. So I'm like 60-35. And then I went further out the risk curve and I bought a basket of alts as well. Equally weighted.
Which ones?
Well, I'm not going to say because because I don't want to make it like I'm pumping anything, you know, because the alts world is a little bit wild and crazy. So I didn't want to do that. But basically what I took was, I just looked at ones that looked like they were getting network effects. I asked people on Twitter, I got 6,500 responses. So I could figure out, okay, what looks like they've got network effect here. I look at the charts, and as long as they're a reasonable size market cap, I just took an equally weighted basket because I've no clue and I just don't have time to understand these in the depth that, you know, we've all had to learn Bitcoin in, and we're all having to get up to speed with Ethereum in. So I did that because I know in the end, everybody does what I've done, which is they go further out the risk curve. They do it in emerging markets. So you might start with the EM ETF, which is a very simple way of getting emerging market exposure. Then you might get more India exposure because you kind of favor that and it works for your time preference. Think, okay, India, I can see that this is going to work for the next 10 years. And then as that trend starts developing, you start buying all sorts of frontier markets because everybody's piling in the risk curve. And the same happens in crypto.
And so you don't even know if they were like DeFi tokens.
I've got a mix from derivatives to DeFi to DEX. I mean, I purposely made a kind of relatively balanced basket. You know, it wasn't a totally random process, but it was just some of that, to try and get an overall balance of the space. You know, I wanted interoperability, I wanted DeFi, I wanted fast payment networks, I wanted, you know, just different things, different protocols that allow smart contracts, and just got an overall basket of that.
Interesting. And actually, so this then leads to this other question. I wanted to ask you this thing about Metcalfe's law and the value of a network. So I was just wondering, like, does that simple framework apply to any network with any purpose? Or do you feel like certain purposes will kind of like retain more value better than others?
Well, we can see it within, let's say, social media influencers. The larger their network is, and the more their network creates connection points with each other and other places, the more that celebrity is worth. It actually exists almost everywhere. It exists in nature as well. So a strength of the network comes from the network effect. So I think it's true almost everywhere, and the internet has made it more prevalent in our everyday lives. Religion was basically that too. That was a network effect and had Metcalfe's law in its earlier days. So we do see it in many places, and in biology and in nature, we see it almost everywhere. Okay,
so you don't feel like whether it's a payment network or a borrowing and lending protocol, it doesn't matter?
So Facebook, Google, Amazon, 3 wildly different network effects. and we might as well use 3G. Three completely different things. Not internet, email. All massive network effects, all wildly different things.
Okay, so one other thing that I want to, so Lynn, when you were talking, it just seemed like I totally got how you were saying that the way Ethereum is going now, like you could see it going one way or the other, like becoming a widely used business that where, Ether isn't exactly super valuable, or, also becoming used, but also Ether does become valuable. It's sort of like unclear. However, obviously we do have the Ethereum 2.0 transition that has begun. It will take, who knows, at minimum 18 months, I think. So it could even be as long as like 3 years. However, within that, there's also this Ethereum Improvement Proposal 1559, which would burn the base transaction fees, and then given the kind of like minimal amount of inflation, you could end up with Ethereum being deflationary. And so do those changes that are kind of in the works start to make you think that actually down the road, ETH could become more investable?
Also, I think one of the things we're talking about here, and again, I wrote in that long article that I wrote in Global Macro Investor about this, is S-curves are very prevalent in this. And the S-curve it's either the questioning point or the failure point. And what we're saying here is there's a big S-curve in Ethereum right now coming up. And will it work or will it not work? We don't know. Almost all of the currencies have had this. Bitcoin's had several S-curve moments where it could have failed, and it didn't. So then the Lindy effect takes place, which is the longer it survives, the more likely it's to survive. So again, it's why we're all really interested in this space, because there are outcomes of which we don't know. We can't figure out the probabilities. We've got no historical parallels. So it's a really interesting space for all of us to try and figure this out, because what S-curve is just a pause before the rise, and maybe that's what I think Ethereum is going through. Again, I don't know. We'll find out. And that drives us further up Metcalfe's law and the Lindy effect. Some of these S-curves will see total failures. So as they have existential crisis. So it's amazingly interesting.
All right. And actually, so the one last question just about this before we move to GameStop, Raoul, you did tweet that you thought ETH might well, and I'm quoting here, might well go to $20,000 this cycle. Are you still standing by that?
It's all I did. No magic. I took the chart from 1 million wallets and 1 million wallets in Bitcoin. And where did it go? It went to 20,000. So I'm like, okay, that's a good enough guess. Does it hit that? Does it not hit that? Irrelevant. What it means, what I'm really trying to say in something like that is it's much larger than you think. And we've got some idea of an event that played out in the past and looks very like this. And, people like me love a bit of a historical chart pattern, even though I said this whole new space is exciting. But when you've got something that's so highly correlated, it's like, okay, this is interesting. That sounds a sensible target. And I know it sounds nonsensical to many, but because nobody can think in exponential terms. We're just incapable as humans to think. I spoke to Mark Yusko earlier. He said, and he had a great, and again, I don't know if his maths is dead right, but just take it as roughly. He said, I can walk 20 paces and go across my office. Linear paces. If I take 20 exponential paces, I go around the world 3 times. That's why we cannot think in exponential terms. It's hilarious. Humans just can't do it because we don't think that way.
I like that. That's a great quote. And so, Lynn,
whether Mark's maths is right or not, I don't know. But, he's going to be.
Maybe I'll try to find somebody to fact check that.
Yeah, exactly. I'm sure we can find something.
Any last thoughts?
I think it's the same crowd. It's the same people. They're discovering price discovery, opportunity, things that nobody understands. I mean, nobody understands any of the DeFi projects they're trading the tokens of or any of this stuff. But that's okay. People will lose money, people buy money, but what you're actually doing is giving people the testing tools to test out how to invest and how to figure this stuff out. And, Bitcoin had its S-curves. People will have their S-curves in their learning cycle of investing. But I think what it's actually done has empowered people overall.